This video is going to show you how you can make money trading the Forex using Fibonacci ratios. There's two main types of Fibonacci's, retracements and Fibonacci profit targets. Fibonacci retracements show you low risk places to buy in the direction of the uptrend on a short-term pullback. Fibonacci profit targets are where the market usually will move to as the trend continues and then stall or reverse. Let me show you an example here. The market is moving from the bottom up, and you want to draw your fibs on here. You left click on the chart using leveragefx.com's Fibonacci tool. Left click and drag all the way to the top. So this shows the 38.2% Fibonacci pullback, the 50%, and the 61.8. I usually recommend to new traders the directional move has to be 25 to 30 pips or more, and you want to buy the 50 or 61.8% fib pullback. So let's look at this particular example. The market pulls right down to the 61.8% level. If you would have bought it to 50 and scaled in it to 61.8, the market continues its uptrend. See, the market makes a move up, pulls back, and the fibs give you a low risk place to buy in the direction of the trend in anticipation of the trend to continue. Now as the market goes up, you'll see our Fibonacci profit targets are then displayed. This is the 1.382 Fibonacci profit target. Most times the market stalls at this level. Strong trends will go to the 1.618 level, then reverse. If you're a counter trend trader, using the Fibonacci profit targets, using LeverageFX's properly set Fibonacci levels, is one of the lowest risk places. So you could get into your short right here at 1.3195 and scale in again up here at 3204. And you can see the market pulls back about 15 pips. Goes up and tries to test the high again, forms a double top, and then pulls back about 20 pips off the high. So this Fibonacci system lets you get into the trend on a pullback. You buy here, the market goes up here, you exit your longs, and you consider going short if you're a counter trend trader. This trade right here found about 40 pips up, and the counter trend trade found about 20 pips on the way back down. Let's look at other examples. Here the market's in a strong uptrend. It obviously is a failure because the market explodes down, right at 10 o'clock, right during news. You want to draw your fibs on here from the highest high to the lowest low. And as we scroll into the future, we want to get short here at the 50 and the 62% level. And in this case, it didn't actually hit the 62% level. Our short right here at 31.65 fell about 20 pips as we are anticipating the downtrend continuing, which it does. Let's go look at another example. Here's an example where the market shoots down, comes back up to the high, fails to break out higher, comes back down again, fails to break out lower, tests the high again, and then finally breaks down and makes a lower low. So now we can assume the trend is down. You want to wait for the first consolidation area to draw your fibs. So you draw it from here to here. And because the market's not able to retrace up to the first 38% level, I suggest not buying the first 1.382 fib profit target. You want to buy the second one, because this is a sign that the market's not even strong enough to retrace back up to even the most minimal retracement levels. So if you're a counter trend trader or you're trading with the trend, you want to hold on, and this is an excellent place to get out of the trade at. Let's see what happens. Market just touches this area to the pip and retraces back up about 40 pips. So for those of you who are short, it gives you the absolute perfect place to get out of your trade. You would have caught 100% of the move, and you can trade counter trend there very safely because you can risk 5 or 10 pips, and in this case the market went up 40 pips your way. When you risk 10 pips and you make 40 pips and you're right 50 to 60% of the time, you make a ton using the Fibonacci tools in the Forex. Let's look at another example. Here's another example. The market shoots up, fails at the high and comes back down, makes a lower low. We can now assume the downtrend's in place, and we want to scroll over, and if you draw your fibs on here from the high to the low, notice the market retraces right up to the 38% fib level and stalls. This is a relatively risky area to get into trades, but it does work when the market's really weak. Let's scroll to the right and see what happens. breaks down and it's going to a lower low, and you can see the market stalls right at the first Fibonacci profit target. If you're short right around here, this is your first profit objective, and in this case you made about 35-36 pips. And if you're a counter trend trader, you can wait for this level to get into a low short-term counter trend trade. You would have bought here at 31.45. The market went up about 20 pips. Actually went up about 45 pips. So that's a low risk place. If you risk 10 pips down there, again, in this example, you made about 45 pips while risking 10. And these Fibonacci profit targets are about 60 to 70% accurate in my testing. This concludes our Fibonacci analysis tool. If you'd like to see more free videos, go to our website at leveragefx.com. That's LEVERAGEFX.com.